So Ghana's government has received approval from over 90% of bondholders to restructure $13 billion in international debt, marking a crucial step in its economic recovery efforts. The restructuring aims to reduce the nation's debt burden and equally meet conditions set by the IMF as part of the $3 billion bailout package. Now, the approval follows months of negotiations, including talks with official creditors like China and France. They're always there. Now, this milestone comes after Ghana's central bank raised interest rates multiple times and the country battled rising inflation and weakening currency. Well, the restructuring is expected to significantly cut debt payments and help stabilize the nation's economy. I have Patrick Abankwa joining me on the show this morning. He's a financial analyst, and we will be unpacking this. Patrick, nice to have you around once again on Business Edge.
Thank you very much. Thank you very much.
Okay, so let's quickly look at the details. What might have influenced the agreement and the approval from the bondholders for this, of course, restructuring of this $13 billion debt?
Okay, so I will start by saying that the approval for starts is a significant milestone in Ghana's economy, and it demonstrates some strong level of confidence from international investors in Ghana's commitment to fiscal responsibility and its ability to recover from the economic challenges that we face from 2022 all through to 2023 and even beginning of this year. And this approval for me paves the way for a more sustainable debt profile, which is essential for attracting future investment and fostering economic growth for the country. So I think the investors looked at government's commitment to fiscal discipline and its ability to meet up with the promises that it was making as against their investment going down the drain if such an agreement was not met.
So then how critical was the involvement of international creditors like China and France? They are always at the forefront when it comes to debt restructuring, owing to the fact that they've given so much to these countries. Of course, when it comes to the time whereby these countries need to pay back with interest, there's always a need for restructuring, and talks would have to go on, for debt relief and all that. But then when you look at these two countries, how would you describe the role they played? And of course, when you look at the dynamics around global financial relationships?
I mean, the impact of countries like China and France is huge for developing countries like Ghana when it comes to debt restructuring deal. Their support provided the necessary leverage to negotiate favorable terms with other creditors and also helped to build a consensus around the restructuring plan. I think the participation of these creditors also signaled a renewed commitment to Ghana's economic recovery and also boosted investor confidence for other smaller investors to begin to sign up to the agreement that government presented on the table when the program started.
Okay, so earlier on you talked about financial discipline on the part of government, but then it's still been a bit of a struggle for Ghana when we're talking about rising debts and inflation in the country. So how well would this restructuring deal really help in the nation's economic recovery efforts, particularly in terms of fiscal sustainability and investor confidence?
I think that it's very important to put the process in perspective. And the perspective I want us to consider here is that where were we as a country? So we got to a point where government clearly saw that there was a need for them to go into a restructuring program because the revenue that we're generating as a country was not enough to meet both the international creditors and also the local creditors, which is channeled through bonds and treasury bills. And for that matter, government had to quickly go into an agreement where IMF was going to come in to help bring some kind of credibility to any attempt that it wanted to issue in terms of a bailout. So I think that Ghana over the period had to go through this challenge because that was the only way for us to be able to meet, maturing obligations both to the local creditors and also to the international community. And I think that even though this program is ongoing, Ghana still requires additional international support to fully recover from the economic challenges that we face as a country at the moment. And I think the IMF and some multilateral institutions can provide some technical assistance beyond the funding that we have gotten and also the restructuring so that Ghana will be on a sustainable growth path over the period that the IMF program is ongoing and also the terms that have been agreed with the creditors.
That seems to be an emergency, approach to dealing with the economic issues in the country. But then when we look at it short term and long term, would you say that these efforts will be sufficient enough, at least steady the ship?
I think that the debt restructuring has both impacts in terms of short and long term. I think that in the short term, it provides Ghana the much needed relief from debt servicing costs, allowing government to allocate more resources to essential services and also stimulate economic activity. However, in the long term, the restructuring can contribute to a more sustainable growth, which will help in reducing the risks of debt default in future, by which, if we're able to follow on that tandem, we'll be able to improve Ghana's creditworthiness. However, the success for me of this restructuring would depend on government's ability to implement sound economic policies and also manage its fiscal affairs effectively. If these two are not done, we'll be able to come back to the same table some years back, because we set out a plan and government was not able to be disciplined to follow the plan, which was agreed with IMF.
Yeah, Patrick, what kind of economic policies are you anticipating? A few people will think or say that most of the reforms carried out by the Ghanaian government are IMF and World Bank induced. So I'd like to find out if this would be outside of the control of the IMF, or the terms and conditions set by IMF for this restructuring deal, or you would solely place it on the table of the Ghanaian government to come up with the kind of specific policies that will critically address the challenges the country is faced with economically?
So I will look at it in both ways. So IMF conditions will play a part. Government of Ghana will also play a part. Government of Ghana's part will be fiscal discipline, ensuring that funds and loans that we take are used for areas of the economy that will generate revenue to be able to pay these loans, and ensure that we don't go beyond certain limit when it comes to our spending. That's what government can do. What the IMF deal is doing is that it's giving Ghana credibility. Credibility in the sense that if you're able to map up strategies that we are implementing day by day and year by year, then the international community, the capital market, will be open back to Ghana, and Ghana will be able to get a short-term, low-cost funding, so that shortfall that we always find in our budget will be implemented. So IMF is giving that credibility for investors to begin to trust us again, open up for the capital market. Ghana as a country should also stick to its restructuring plan, stick to fiscal discipline, and ensure that when it comes to every money spent, we are spending it devoid of corruption, devoid of things that will lead to the funds not getting to the rightful position. And that's where, if care is not taken, we'll end up at the same position that we got to before 2022.
That would be at cross purposes with the monetary policies of government that I have seen of late in the country. So I'm wondering what the broader implications of Ghana's repeated interest rate hikes and the rising persistent inflation that I've seen in the country, what that would mean for the country's economy, particularly when we talk about consumer purchasing power and economic growth.
So Ghana's repeated interest rate hikes and inflation, as rightly said, have some mixed implication for the recovery that we are on. I think on one hand, these measures are necessary to curb inflation and stabilize the economy. However, they can also have adverse effects on businesses and consumers, which will lead to reduced investment and consumption. I think the government must be very careful to balance the need to control inflation with the need to support economic growth. A well-targeted monetary policy can help mitigate the negative impact of interest rate hikes and inflation. So government will have to balance off between factors or strategies that they are putting in place to control inflation, as against what steps they can put in place to boost the economic growth that we are expecting, because that is where you'll be able to create jobs. That's where you'll be able to afford the kind of the developmental infrastructure that you want to put up as a country to support the needy and the vulnerable in the country.
I've come out to say that the Ghanaian economy wouldn't have been as bad as this. So I want to take you back to February 2022, when credit ratings agency Moody's downgraded Ghana's rating, saying that it had a very high credit risk. Fitch at that time cut Ghana's credit rating to about B minus from B, of course, as at that time. Now, did that further contribute towards the deplorable state of the Ghanaian economy?
Yes, yes. So the challenges that we face actually started from that point. For the last 15 or so years, anytime government has economic challenges and monetary challenges, government went to the capital market to borrow from the Eurobond market. Now, when investors begin to get insight into the fact that government is going to struggle to raise money to pay their coupons and also their investment, they started withdrawing their support either through the bond market or through direct foreign investment. And once that started, that led to government not getting enough revenue to even meet up domestic debt. And once that generated into something bigger, then it got to the point where external debt were also going to be affected. Again, one factor we should also consider is the fact that Ghana's cedi has also struggled within the period, because these foreign credits that we've taken, the Eurobond, we need to pay returns or the coupons in foreign currency. Now, if you have your cedi depreciating against this foreign currency, you may have the same, let's say, $1 billion to service. But how much cedi you needed to service it last year is not the same quantity that you need to support or service this year, because the cedi depreciated. So all of these factors led to the challenges that we face, for which government needed to go to IMF at some point in time. Government's critics, including myself, has been that when government realized that these things were building up, we should have perhaps engaged creditors faster, so that the situation would not have gotten to where it got to before IMF had to step in. So for me, these are the conditions that has really impacted on what we have done over the last 2 years in terms of government going to IMF, debt restructuring, external, domestic, all of these things together.
As though in May, that same year, 2022, the Ghanaian government was confused because Ghana's then finance minister, Ken Ofori-Atta, said that, Ghana would manage its debt without the help of the IMF. But then later, I think in July 2022, the Ghanaian government changed its mind and went back to the IMF for a loan. But as at the time, we started seeing, protests on the streets when the economic hardship began to bite hard on the citizens and the people. So is it based on how confused the Ghanaian government was, or maybe there were other issues attached to the IMF loan that maybe in a way discouraged the Ghanaian government from wanting to approach IMF in the first place?
We all know that when it comes to IMF discussions, it has impact on the economy in terms of what government can do. Government spending will have to be streamlined. Government subsidies will have to be discussed. And so every government, when they want to go to IMF, they consider all of these things, especially when they know that election is also approaching. So these conditions will put some kind of a burden on the citizens, because as we speak, taxes have gone up. A lot of things that have added cost to businesses running in this country have gone up because of IMF conditions. Government will consider all of these things before they take a step. And that's perhaps the reason why the process of government going to IMF delayed. And I've said earlier on that it's one of the reasons why perhaps we had to go through the challenges, because if we had gone earlier on, maybe 2021, when we realized that things were getting tough, perhaps we might have gotten better conditions with even the creditors. So government will consider all of these things, the impact on the next election, and what would that impact be in terms of the economy, inflation, and all of that. Then government would say that, okay, let me wait a bit and see whether domestically we can improve the situation. But as we all know, the situation did not improve, and eventually government had to bite the bullet and go back to IMF, something that the minister at the time had constantly and openly said that we're not going to do. So for me, these are the issues that I saw as the reason why perhaps government did not go early or made some bluff sometime early 2022 that we're not going to go, but eventually we had to go because of the challenges that were compounded over the period.
Good for Ghana with a deal going on, it's been approved, and now Ghana seems to, for a while, be able to heave a sigh of relief. And we just hope that the reforms that will be coming on board at this time will help the country to accelerate its economic growth plan. I mean, a lot of people will be hoping for that in the country. Patrick Abankwa, a financial analyst, thank you so much for sharing your thoughts with us on the show.
Thank you very much. I wish you all the best.